Hey there, savvy viewers, and welcome back to our channel. Today we're diving into a topic that I know many of you have been eagerly waiting for: how to get started with investing. Whether you're looking at your savings and thinking, what's next? Or you're inspired by success stories from investments in giants like Tesla, Netflix, or Amazon, you're in the right place. Investing can seem daunting, but fear not, because we've broken it down into 15 easy-to-follow steps. Before we jump in, remember to hit that like button and subscribe to our channel for more insightful content. Now, let's unravel the mystery of investing and set you on the path to financial growth. So, you want to get started with investing? Maybe you've saved up some money, not enough for a house, but you think it's time to invest. You've heard about successful investments in companies like Tesla, Netflix, or Amazon. But investing can seem like a complicated black box, right? How do you even buy stocks? What is a stock? Can you just go to a company's website and buy their stock? And then there are all these acronyms like Roth IRAs, 401ks, ISAs, and LISAs. Plus, there's the fear of losing money because investing is risky. Well, worry no more. This is the ultimate guide to help you get started with investing. It's the video I wish I had when we started investing in stocks and shares years ago. As promised, we're breaking it down into 15 easy steps. Step 1. The inflation game. Think of inflation as a silent thief, stealthily reducing the value of your money. Imagine having $1,000 now, but in 10 years, due to a 2.25% average inflation rate, its buying power drops significantly. This is where investing becomes your superhero, fighting off the effects of inflation and keeping your money's value strong and steady. By investing, you're not just saving your money, you're empowering it to grow and outpace inflation. Step 2. Beating inflation, the growth race. It's not just about keeping up with inflation, it's about outperforming it. While a savings account with a 2.5% interest rate might just match inflation, think bigger. The stock market, with its historical average returns of around 10%, presents an opportunity for your money to not just grow, but thrive. It's like planting a seed and watching it grow into a flourishing tree rather than just preserving the seed. Step 3. The limitations of savings accounts. Sadly, the reality of savings accounts today is a bit underwhelming. With interest rates typically under 1%, they're more like a slow drain on your money's potential. In contrast, investing in the stock market is like boarding a faster train to wealth accumulation. Think of each investment as a power boost to your financial growth, propelling you towards your goals much quicker than a traditional savings account could. Step 4. Investments, more than just stocks. When we talk about investments, it's not just about stocks. An investment can be anything that generates income or increases in value over time. Yes, stocks in companies like Amazon and Tesla are exciting, but consider the broader spectrum: real estate that brings in rental income, bonds that grow steadily, or even starting your own business. Each type of investment comes with its unique set of benefits and risks, opening up a world of opportunities for you to explore. Step 5. Shares explained further. Delving deeper into shares. When you buy shares, you're getting more than just a tiny piece of a company. You're essentially joining in on the company's journey, sharing in its successes, and yes, sometimes its failures. It's like becoming a part owner of a business, with the added advantage of earning dividends and benefiting from stock appreciation. Think of it as a more active way of growing your money with the potential for exciting returns. Step 6. The online brokerage revolution. The digital age has revolutionized how we buy shares. Online brokers have made the process incredibly user-friendly and accessible. Gone are the days of complex stock trading processes. Now it's as easy as a few clicks on your computer or taps on your smartphone. It's about bringing the stock market to your fingertips, giving you control and flexibility in your investment journey. Step 7. Picking the right shares. Choosing which shares to buy, especially for beginners, can be a bit of a puzzle. It's tempting to dive into individual stocks based on popularity or news, but this can be risky and requires extensive research and market knowledge. Many investment experts recommend a safer and more balanced approach for beginners: index funds. These funds pool investments in a wide range of stocks that mirror a market index like the FTSE 100 or S&P 500. This way, you're not just depending on the performance of one company. Index funds also simplify the investment process and often come with lower fees than actively managed funds, making them a cost-effective choice. They offer a straightforward way to achieve diversification, reducing the risk of significant losses if one particular stock or sector underperforms. Step 8. Index funds, a comprehensive understanding. Index funds are a smart choice for many investors, particularly beginners. These funds track market indexes like the FTSE 100 or the S&P 500, allowing you to invest in a broad range of sectors and companies without the need to research individual stocks. They're like a sampler platter of the stock market, giving you a taste of everything with one investment. The beauty of index funds lies in their simplicity and effectiveness, especially when it comes to diversifying your portfolio and reducing risk. They're also known for lower fees compared to actively managed funds, making them a cost-efficient option. Step 9. Mastering the ups and downs of investing. It's crucial to understand that investing is a journey with its highs and lows. While the stock market may fluctuate in the short term due to various factors like economic changes, political events, or global issues, it has historically trended upwards over the long term. Embracing a long-term perspective helps in weathering these short-term market fluctuations. It's about having the patience and not reacting impulsively to market volatility. Smart investing involves a balanced approach, keeping an eye on your long-term goals while staying adaptable to market changes. Step 10. Perfect timing for investment. When it comes to investing, the earlier you start, the better. Thanks to the power of compounding, even small amounts invested early can grow significantly over time. However, it's also vital to be financially prepared. Clearing high-interest debts and having a solid emergency fund in place sets a stable foundation for your investment journey. This preparation ensures that you are investing money that you can afford to set aside for the long term without the need to withdraw it prematurely for unexpected expenses. Starting early, combined with consistent investing, paves the way for a more secure financial future. Step 11. Choosing the right brokerage. When you're ready to dive into investing, choosing the right online broker is like picking the best tool for a job. You want a platform that aligns with your investment goals, offers low fees, and provides educational resources. Some platforms even offer simulated trading where you can practice without risking real money. It's all about finding that perfect match for your investment style, whether you're hands-on or prefer a more automated robo-advisor approach. Step 12. The power of compound interest. Here's a little secret about investing: compound interest. It's like magic for your money. Imagine your investment earnings generating more earnings, and those earnings generating even more. Over time, this compounding effect can turn even modest savings into substantial wealth. It's like a snowball rolling downhill, growing bigger and faster as it goes. This is why starting early, even with small amounts, can lead to impressive results in the long run. Step 13. Diversifying your portfolio. Diversification is your best friend in investing. It's about spreading your investments across different assets: stocks, bonds, real estate, and more. Think of it as not putting all your eggs in one basket. By diversifying, you reduce the risk of your portfolio, taking a big hit if one investment doesn't perform well. It's about creating a balanced mix that can weather different market conditions. Step 14. Staying informed and educated. The world of investing is ever evolving, and staying informed is key. Follow financial news, read books, and maybe even take an investment course. Knowledge is power, especially when it comes to your finances. However, remember to filter the noise and focus on credible sources. The more you learn, the more confident and effective an investor you'll become. Step 15. Setting realistic expectations. It's essential to set realistic expectations. Investing isn't a get-rich-quick scheme, it's a journey towards long-term wealth. There will be good and bad days in the market, but patience and a well-thought-out strategy can lead to rewarding outcomes. Set clear, achievable goals, whether it's saving for retirement, a house, or your children's education, and keep a steady course towards these objectives. And hey folks, here's your bonus step 16. Embracing the investor mindset. Finally, embrace the mindset of an investor. This means thinking long-term, being disciplined with your investments, and not letting emotions drive your decisions. It's about making informed choices and sticking to your strategy, even when the market gets rough. Remember, investing is not just about making money. It's about creating financial security and freedom for yourself and your loved ones. And there you have it, everyone, our complete beginner's guide to getting started with investing. We've covered everything from the basics of inflation and savings accounts to the exciting world of shares and index funds. Remember, investing is a journey and it's about playing the long game. Start small, stay consistent, and watch your investments grow over time. If you found this guide helpful, don't forget to like this video and subscribe to our channel for more financial wisdom. We're here to help you make smart financial decisions and reach your goals. Happy investing, and we'll see you in the next video.